Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, April 20th, 5:30 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend, excluding regional banks and commercial real estate. Check over here at the trend gauge. Market leadership flagged as neutral with the green sub arrow, making some progress in some leaders, but for the most part, a lot of chopping going on. But that's really what's been going on in the indexes as well. Taking a look at 5 major indexes across 3 time frames, short term, all 5 are above the short term 21-day moving average. We're mixed on the medium term 50-day moving average, with the large caps above, mid and small caps below, and versus the long term 200-day moving average. 4 of the 5 are above, small caps lagging continued fallout from the mini banking liquidity crisis. So what happened today? Woke up to a pretty significant gap down 0.75% on the S&P, 9/10 on the Nasdaq 100, and basically put in the low right away. And we started bouncing very similar to the way we bounced for the prior 5 days. And everything, formed a little base late morning, broke out, made highs of the day, but that came to a screeching halt around 2 p.m. And there was just a very hard reversal after that. So for the prior 5 days, afternoon buying certainly was a change in character, minor change in character today, but something we want to mention, because buy the dip has been the name of the game, and we didn't buy the dip today. We did in the morning, but the afternoon strength, which is a hallmark of bull markets, typically a weak open and a strong close, is what you see in bull markets, but we didn't see that today. So after 5 straight days of it, yeah, maybe it's time for a change, but we do want to note that as we saw some short-term deterioration relative to the very short-term moving averages in actually one, two, three, four, five, six of the 11 spider sectors are now either at or below their short-term ADMA after starting the week in a much healthier environment. So we pay attention to sectors, we pay attention to leaders. We had 4 of the Titan 25s deteriorate today also, so we're keeping our finger on the pulse of everything. We've said if the Titan 25 holds up fine, um, the markets, because of the heavy weight in them in the big cap indexes, just can't fade, but we're monitoring them closely. And we saw a little bit of deterioration today. Uh, we took some exposure off the board. I'll talk about that when we get to the tail of the tape and go through the chart. So afternoon fade. Here are the final numbers. RG7, this is our Revere Growth 7, led to the downside big time by ARK-K as Tesla gapped down and finished down 9.8%. So the RG7 down 0.84%, with ARK-K being down 3.8%. We bought SARK today, which is the inverse ARK-K ETF, and that's an easy way to hedge some of the long growth exposure that we have. S&P 500 gap down 0.75%, made it back to just about flat, deteriorated, little bounce into the close, down 0.6%. Nasdaq 100 gap down 0.9, made it to positive today, which was a pretty good accomplishment with Tesla being down near 10%, but that rolled over also, finished down 0.8%. Dow Jones Industrial Average down 0.3, mid caps down 0.4, Russell down a little over 0.5%, Global Diversified 60/40 down 0.37, foreign stocks down, foreign bonds up on the day. In-house GROTECTION down 0.39%. So let's get into the charts and into what we do here at Revere Active Management. We like to keep our finger on the pulse of what's going on in the market and participate in market uptrends, but get the heck out of the way when the market is in a downtrend, primarily when it's below this black line here. That's the 200-day moving average. And all bear markets occur underneath that level. Typically, from a high until you break it is about a 12% move to the downside. Last January, February, when we started to roll over, we started about 10% above the 200-day. Quickly deteriorated, got below it, bounced around it a couple times, but all the damage is done below the 200-day moving average. We're above it now in all indexes except for small caps, but we're focusing on what's working and basically staying away from what's not. Leaders haven't been particularly strong. There are some that are in lockout rallies, no question about it, but that's really been the exception and not the rule. And we've been trading really in a tight range for about 3 weeks as the market seems to be waiting for the result of some earnings reports to come in. And really, the first big one that was a negative was Tesla today. So we'll see if that leads to more downside, or we'll see if the markets, which have been above the 21-day moving average, that's our short-term trend, for 19 days, it'd be very normal to have a pullback to that level and bounce. And we're 2.4% above the 50-day moving average. So if we overshoot that, we'll see if we bounce there. I'll detail shortly the exposure changes that we made today. But here's the 5-minute chart. You see the gap down, nice little rally early, took a break, nice little rally up to near break even. But then you can see this pretty harsh rollover that took place starting at about 2 o'clock into the lows about 3:30. Bounce back to this 4130 level, which was the morning lows by the close. So minor damage done. We have been, as you can see, this purple line bouncing at the ADMA. This is the first time we closed below it, not by much, by a tenth of a percent, but uh, sometimes it's the little changes that lead to bigger changes. So um, once something happens one time, it's just an occurrence. Twice is possibly a trend. So keep an eye on when something happens twice or more. So here, moving along to the Nasdaq 100, which has been weaker than the S&P 500 as semiconductors have lagged, and some of the FANG stocks strong, but when you've got the number 5 sized uh, Tesla in there down 10%, you're going to lag. So uh, we've been going basically sideways on this also for 3 weeks since this attempted breakout on 331, very close to the 21-day moving average. Now you can see the relative strength line heading down. Let's go to the Dow Jones Industrial Average, which is where money likes to hide out in times of turmoil. Uh, Not so much the last week as it's been flagging after a pretty strong rally up over the prior couple of weeks, closed right on its 8 EMA today, unable to get above this 34,000 level, really being dragged down by the highest price entry in there, United Healthcare, although it closed slightly positive today. But something we're keeping an eye on. Very possible and wouldn't do damage if it pulled back to the 21-day EMA. Mid caps, tight range, 8 days now, right above the 21 EMA and the 200-day moving average. A clear break above this downtrending 50-day moving average would be a good move for the bulls. A clear break below this level and below 450 would put the bears back in control. Let's go to IWM, small caps, same tight range action uh, for the last 8 days, similar to mid caps, but it's occurring uh, above and below the 21 and below the 200 and the 50-day moving average. And you can see the 50 getting ready to break back below the 200. So which way we break out of this range on the mid caps and small caps just very well may dictate the next move for the market. So those are the 5 major indexes. We've also been talking about regional banks a lot. Let's see how they did today. Nice day up yesterday, inside day for them today, down 1.9%, unable to get above, and we really want it to get above this declining, it's kind of flattening now, this 21-day moving average, which it broke hard below all the way back at the 6 weeks ago at the beginning of March. Trying to put in a bottom, but we want to see it above yesterday's highs to give us a little bit of confidence about what's going on with regional banks. Let's take a look at the dollar now. Dollar trading in a tight range was really a gap down and just trickled gap down, made a lower low, and then just edged its way higher into the close. Didn't seem to be making much of an impact on the indexes, which were doing their own thing, but it did somewhat on precious metal stocks. So let's go right into them. Gold, dollar gold was up today, but finished near the bottom of its range. We're making sure gold holds the lows of this week, which were put in on Monday and Wednesday. GDX gold stocks. Uh, the ADMA has rolled over, minor change in character there. So this is looking like a possible island top there. Relative strength lagging, rolled over on the stochastics, but barely down at all today, basically flat. And then silver SLV down 0.26. It's been consolidating tight over the last 5 days. Again, the stochastic rolled over there. Things don't stay up forever. You can see the gyrations of what they do, and this is a 14 period look back. And basically, you're comparing what is it doing now to what it's done over the prior 14 days. So that's how and then you've got a moving average of those in the blue line. The signal line is the black line. Let's move to bonds now. Broad bond index. Bonds across the board started out strong today, which means yields were down. They pretty much stayed that way all day. You can see the gap up right into the 21-day moving average, which it spent 3 days below. Uh, really moving up off the bottom of this range that we've been in. You can see the little hookup in the stochastic there as we approached oversold. TLT made it to oversold and hooked back up today off the bottom of the range. Very similar action. So that means that yields were down today. Here's the 10-year yield. Really just a reaction as of now after a pretty strong up 4 out of 5 days, ran into the 50-day moving average and pulled back to the 21, and TYX, the 30-year. We're in the equivalent of TLT, which is TMF, 3 times the TLT, also pulling back after a recent nice move up here. Let's go to Bitcoin. Bitcoin down another 4%. Let's go to the 60-minute chart on this because this is looking like it's a risk off. So we had a lot of excitement with this rally in Bitcoin that started back in mid March, gapping up, pulling back, holding the pullback, another gap up, two straight, little bit of a consolidation here, another gap up, pulling back. So you got a tight range here that we broke out of, and this corresponded with the 30,000 level on Bitcoin on 4/11, so 9 days ago. We consolidated there, gap down back into this area, and now we're making a lower low. So basically, that means that this breakout above this level, 17-ish, which corresponds to 30K on Bitcoin, has failed and it's rolled over now. So needs to hold the lower end of this consolidation, which is where we are right now. You can see that around the 16.4 area, and this is Bitcoin futures that we're looking at. So those are the major indexes that we check in every video, inter-asset correlation, and let's move on to the tail of the tape now. You can pause this. I'm going to hit the highlights. So some news: Philly Fed Factory Index, 8th straight negative reading. So if the Fed wanted the economy to slow, and they're getting it. And if they wanted more unemployment, they're getting that too, as jobless claims also rose. Surprisingly, we're still looking at an 84% chance of a 25 basis point hike when the Fed meets in 2 weeks. The day count, fifth day of the consolidation, ADMA is 0 day, as we basically closed right on it, 19 days above the 21 EMA. When you're 4 weeks above the 21, you've got to expect some sort of a pullback. So not a surprise at all. Uh, if we would continue to pull back to it. As long as we stay above that 21, we're got positive expectations. That was confirmed with us staying above the 21, although the minor change in character with the weakness today. So as far as the major levels on the S&P and the Nasdaq 100 go, we stayed in range between the support resistance level. This key fib, 315.59, we touched it in the morning, bounced, undercut it, and got back above it by the close. Keep an eye on this level, 316.68 to 315.59, very key level. Support resistance bounce is what we saw today. I already described the action today. As far as sectors go, ITB making another higher high. Gold up today and staples. That's about all that was up today. Semiconductors gap down at the open despite some good news in reporting earnings from LRCX and Taiwan Semi. Then they took a leadership position and then rolled over to near flat by the end of the day. Dollar started out weak, ended up flat. Bond yields down, uh, KRE, which is regional banks down, biotech down, oil's down again, and XLC, XLY, and XLRE, that's communications. XLY is consumer discretionary, and RE is real estate. Portfolio changes. We added to Lulu, continues to act strong and broke above its range from the 3 weeks tight after its earnings gap up. We sold SOX L after it. I said it started weak. We had a lot of semiconductor exposure. I talked earlier in the week about how we're looking for a breakout as the SOX had rested, but it reversed to the downside, and when it did, we got out for break even. We sold SSO when we broke back below. When we had that negative reversal today, and we sold Rambus as it had a great day early, started selling off late, and semiconductors made a lower low, got back into the range, and then rolled over again in the afternoon. So we took off a lot of our semiconductor exposure. We still have 6% NVIDIA. And then we bought SARK on trying to take advantage of the gap down and the overall weakness in the Kathy Woods type names. We'll look at these charts momentarily. The bottom line for today, gap down, strong bounce, but it led to a minor change in character, afternoon fade. Nothing broken yet. First close below the 80 MA on the S&P, which we hadn't seen in the last 2 weeks as it's been riding it higher. So we'll see what cards come out of the deck tomorrow, and we'll react accordingly. There are the key levels down there. Let's go to the focus list now, and we'll start off with the changes that we made to the portfolio, starting with Lululemon. You can see it breaking above this tight range. Really, it's long enough that it's a cup and handle now, flagged by Market Smith. Not a lot of volume, but it broke above it, and it's been holding this 80 MA, which is what you want to see after a power earnings gap. So that's Lulu. Now semiconductors. This is kind of a tougher call. Uh, I talked about earlier in the week, is this resting sector ready to break out? And it looked like it was. So let's just draw the line. There is the declining tops trend line. There is the bottom support. It broke out of the triangle very strongly 3 days ago, but faded. So that's the first sign of a little bit of a red flag. Consolidated near the bottom of the range yesterday, gapped down below the range today, but got back in it. So we bought SOXL here with the plan that we're going to sell it if we break below this support area. It broke below it, but immediately strength came into the market today, got back above it, and it became a leader on the day for a short period of time before rolling over in the afternoon. And when it rolled over hard. So this is when we decided to get out of SOXL at break even. And then I'll segue to Rambus, which we also sold. So you can see Rambus had strength. Let's go to a 5-minute chart on this. Nice, I mean, very strong. This is a great look in, but it shouldn't do that after it does it. I mean, this is just distribution after a move up. The lot of high red bars. It accelerated after 2 o'clock into the close, and um, we got to the point to where our pyramid buy was red, and then we got near break even on the first buy, so we got out of it. Um, we want we want things that are going to lead, and yeah, I'm a little too impatient sometimes, but the best trades really do work right away. And I want to bring in this chart, if I can find it, this chart that does a comparison of the Nasdaq 100, semiconductors, and the S&P 500 since 131, because that's the time period that seemed most crucial for the comparison when we looked at getting back in. So since then, 131 into today, the S&P is up 1.3%, the Nasdaq 100 is up 7.3%, semiconductors up 4%. If you include January, semiconductors have outperformed the Nasdaq 100. But look over here, there was just a change in character that happened uh, at the end of March when we noticed semiconductors starting to lag. Well, strong sectors are allowed to take a break, but we anticipated that breakout on what I just showed before um, when I drew that triangle. And but since then, it broke out and then it failed. Uh, Here was the breakout. You can see the breakdown. And since 331, basically all of this month, the S&P 500 is positive, but the Nasdaq 100 is resting. It's down 1.5%, but semiconductors are down 5.5%. I'm not going to sit in something where it was set up to go higher. It tried to break higher and it failed, and then it moved back near break even. We're just going to pull the plug out of it. I did a lot of comparison on these three. I was ready for the decision that I was going to make, and we saw the strength early, but we saw the weakness late, and so we pulled the plug on SOXL and then Rambus, but we're still holding 6% position on NVDA now. NVIDIA, very clear leader. It's led most of the year, and it looked like today, and it looked early in the week, like it was set up very similar to this time here. So when it gapped up on earnings, it went sideways for 3 weeks, tested the 21, bounced off the 21 the way it should have, and then it broke out on a nice move on 316. Very clear, cleared this consolidation and went higher just like it should have. And then since then, it's had a nice 3 to 4 week consolidation now. Bounce off the 21 coincides with this. Up into the top of the range coincides with this very early. Let's look at a 5-minute chart here. Barely gapped down, showed strength immediately and looked like it was going to blow through this 280 area, but then it faded, and then it faded some more, and then it faded some more. Uh, so this looks like NVIDIA is being distributed. That's fine. It's perfectly entitled to do that, but we bought it in anticipation of this bounce off of the 21, that it would break off of there and go higher. And if it doesn't go higher, meaning if it breaks below the low of 414, we'll be out of it. It's very clear, very similar to the that 420 support on um, the socks. That's the equivalent of this level here on NVIDIA. You can see NVIDIA broke out of that triangle also. You can really draw the same triangle. It broke out. It hasn't failed the way the overall semiconductor index has failed. But this was some selling that I didn't want to see today. We're still in it. The last piece of our ad for right now is underwater. The other buys are fine, but if it breaks below this range, we're going to get out of it. Um, and I wanted to show something else on that, but it slips my mind right now. Um, okay, so that's NVIDIA. What other changes did we do? We got out of SSO with that breakdown today. We went from slightly positive to slightly negative. We have a lot of exposure to the S&P 500 with our UPRO. We sold Rambus. We bought SARK. Let's go to ARK-K here. Let's go to a 60-minute. It's very clear here. Uh, two big support areas here. The first one is this 3750 area. The next one down is 37. This is ARK-K. We're buying SARK basically based on arc. They kind of move completely in inverse, but it is a derivative of the underlying. So we're looking at that. A break below 37 on ARK-K will be a nice move in SARK. And this tried to move out earlier in the week too, right here, and it failed. And then Tesla's just a mess now. I mean, with all the price cutting they did, their net income was down, their margins were down. This is a 47 PE stock, which is unheard of for an auto company. I know they've got the semi trucks, and I know they've got solar and all that, and batteries and all that stuff. But the price action is the price action, and it broke below. Not only did it gap down, there was further weakness after it gapped down. Let's look at a 5-minute chart here. Initially, it bounced when the market was bouncing, but then this is just, you know, selling, some buying into the close, but it's probably Kathy Wood buying it. But it undercut this 163.91 area too. So it not only broke this recent level of support, it also broke below support from back in March 3rd. And there's not a lot of support over here, as this was slightly trickling up. So I mean, it could split open, and we don't want any part of that, but we'll take advantage of it by buying SARK. So those are the portfolio changes. Uh, Another reason why I was disappointed in the action in semiconductors today was this. Taiwan Semi, they were expected to cut their CapEx spending. They didn't. It gapped up, continued higher. Let's go to the 5-minute. Very strong, and then started selling off. Uh, the fact that they didn't cut their CapEx, LRCX also reported, this is a semi-equipment company, and it gapped up and was making very nice progress, and but paused. But the fact that LRCX was up, TSM was up, and Nvidia selling off, AMD was basically flat. I expected more out of the semiconductor, so that's why we sold Soxel and Rambus. But all is not dead. We may break above this flat base. And if they do resume their leadership position, we'll still be in Nvidia, and we can add back to semiconductors. So the action of LRCX and TSM, I expected the overall semiconductor index and it to carry through to the rest of the stocks, and it really didn't. Some Las Vegas winds, LVS, Las Vegas Sands also reported good numbers from Macau, gapped up out of this base on big volume, 281% volume. We need to see some follow through on this. Fellow uh, casino with Macau presence. Win also gapped up, but came back into the range here. But keep an eye on the casinos, as there's not a recession in Macau, which is in China basically. They're spending money there. The Macau numbers have come in pretty healthy, and that's why these stocks are acting as well as they are. So that's the rest of the focus list, and I think that is going to wrap it. So as always, love to hear from you. Email's don@revereasset.com. The phone is 855 Real Wealth. That's 855-732 5932. Remember, it's not how much you make in the market, it's how much of that you can keep. I went a little bit long tonight, but it's possible that this minor change in character in the markets, maybe something, maybe nothing. Again, 19 days above the 21-day moving average is a long time. We're due at least to a pullback to touch that. And uh, the afternoon buying didn't happen today. It transitioned into afternoon selling, just maybe too tight for too long, and it's time for a little bit of a break. So we'll see what happens. We still have quite a bit of exposure, more than the equivalent of the S&P 500, and we're in 3 good leading stocks: Lulu, Nvidia, and ON. Let me show ON as that tried to move out today. It was up 5% at one time, closed up 1.2% as the market pulled in, just riding the ADMA higher, which is what you want to see out of these power earnings gaps stocks. We've made some nice returns in this, and need to hold the ADMA as it continues to traverse higher. So that's going to wrap it. I will finish up now. Thursday, 4:20. This is Don Vandenbord telling it like it is. Thanks for listening, and have a great day.